Hello, and welcome to Minnesota Homeownership Center's Welcome Home podcast. My name is Bill Gray, and today we're going to dig into a topic that I'm particularly interested in hearing more about myself, the importance of homeowners insurance and life insurance in securing your legacy. Joining me are Henry Rucker, Associate Director of Homeownership and Financial Coaching at Project for Pride in Living here in town. Welcome, Henry. Welcome back.
Thank you for having me.
Appreciate it. And then we also have Ed Beavers. He's a district manager for Country Financial. Ed has been particularly active with the center and the Homeownership Opportunity Alliance's efforts to reduce our racial homeownership gap here in Minnesota. Welcome, Ed.
Thank you for having me.
Appreciate it. All right, so Henry, you've been preaching on the importance of insurance to ensuring you have a lasting legacy to pass along to your surviving family members for about as long as we've known each other. And this is an area I feel like I don't know much about at all. Why don't you give us your elevator speech on the importance of insurance? I assume you're talking mainly about life insurance here?
Mainly about life insurance. My grandfather was a mortician. For those that don't know, my grandfather is Henry Hammond. I was named after my grandfather. Mm-hmm. And one of the things I've always heard about when he was alive, and he complained about to my aunts and my mom and dad, is that most people did not have the money to pay for a funeral.
Yeah.
Right. And one way to pay for a funeral is by having the proper life insurance, right? Burial insurance, you have life insurance. But the one thing I learned about it as a banker, it's a good way to pass on money tax-free, right? So I tell people all the time, we all are going to leave this earth at one time. And I do think one of the faux pas we have in the Black community is like, well, like, when I'm dead and gone, does it really matter? And I'm like, it does matter, right? That money can be used to help you for a down payment on a house. That money can be used to help put a kid through college, a grandbaby through college. So I think the importance is, we got to plan for the future. And if we don't plan for the future, when do we really set the proper insurance up for our family? You always have to have car insurance, right? It's mandatory. You have to have car insurance. I think it should almost be mandatory that people have life insurance. I'm pretty sure Ed would agree with me that one of the ways to really, if you're dead and gone, it means you can no longer earn any income, right? So how do you replace that income to make sure that your family can survive for those years you're not going to be around to provide for them? And I think one way to do that is through life insurance.
All right. That makes a lot of sense. I know there are different kinds of life insurance, term life, whole life, that kind of stuff. And I know Ed can educate us more on what we're talking about here. What are we talking about here, Ed?
I mean, we're just talking about life insurance, right?
Okay.
And they're basically two kinds. You know, there are about 20 different kinds of life insurance, but there are two main kinds.
Okay.
And most of you have probably heard of term life and whole life.
Term I know about.
Okay. And term is like renting an apartment. Whole life is like having a mortgage.
Okay.
What you can say about when you want to rent a house, you know that you're going to pay this amount for a certain amount of time. And you do know that lease is going to end at some time, right? Same way with term.
Okay.
Whole life is like a mortgage. But you do know that when you sign that on paperwork, that payment is going to stay the same. And I'm not talking about the taxes and homeowners insurance.
Right.
I'm talking about just the mortgage and interest. That's going to stay the same for that whole term until you pay it off. Also with a mortgage, you're going to have equity. And that's what whole life is. So the just easy way to explain it is term is like renting an apartment. Whole life is like owning a home.
So okay. So tell me more about whole life. Because honestly, I don't get it. I know that you pay in and somehow you get money back if you don't die. I don't know. Anyways, you tell me.
So the same as a home.
Okay.
Somebody has a home and it gets passed on to a relative. They have what's called equity. Right?
Yeah.
In a life insurance policy, it's just called dividends, right?
Okay.
So say with whole life, you're gonna get whatever you put up. So say.
So you put it up all at the same time. You're saying
all the same time.
Okay.
So one portion goes into the death part of the policy, and then you have what's called dividends. So most companies, once you have life insurance policies, they're going to pay out dividends every year, and that's what the cash value part of the life insurance is.
Okay.
So say if you have a policy for $100,000, right? Every dividend gets added up every year, and so say somebody dies, they get the $100,000 plus that cash value. Another thing that's similar to a home policy, a mortgage, is that you can borrow off of the equity.
Okay.
The same way you can borrow on a home, you can borrow on those policies.
Okay.
Okay, and it's gonna go up based on how much that company made that year.
Mm-hmm.
All right, so it is not an investment, but it's the only vehicle where you can say it's guaranteed.
Okay.
It
Okay.
actually is the only place on that policy where it says a guaranteed outcome.
Okay. Okay. So, term life, 20-year term, you pay this much a month. It's going to give you this much money if you die before the term's up. I know we did that for our kids for college. Expires next year. And by the way, when that term expires, those payments go up like times 12 or something. It's crazy. And then whole life, like you said, it's you invest up front and you get dividends, and then there's money there, plus the death benefit for when
Yeah.
something happens. It's whole life. I mean, you're in it forever then.
Most companies go to year on 95 or
Okay.
or 100.
So what happens then? You own the
You usually get the cash.
you get the
value
cash
that's in it.
value, but you don't get the death benefit at that point.
And one of the big differences is one is cheaper than the other one.
Right. And term, right?
Term.
Yeah.
Term is basically for people who are maybe younger.
Mm-hmm.
It's actually priced right.
Mm-hmm.
So one thing I always tell people, and you can talk about this too, Henry, is that the caretaker don't care if you have whole life of term.
Right. Right.
All they care about is that you sign over that policy that
Right.
when a person passes.
Right.
So
Right.
it's better to have something than nothing.
And so reasons for life insurance. So passing on something to your heirs, of course. My experience with it is, having something for your kids for college in case something happens to you, so that doesn't get that dream doesn't get taken away. And then the idea of the earlier you do this, the much lower your premium's going to be.
That is very correct. And what I've also found is most people have the actual need is higher when they're younger because your kids are younger.
Right.
Okay.
You got more to lose.
And I always tell young men in that, and it kind of hits hard with them.
Yeah.
Do you want some other man taking care of your kids,
Uh-huh.
or do you want to take care of your kids? All right.
Uh-huh.
Because what happens is people pass.
Yeah.
And now the parents they can't go to the kids can't go to AAU.
Right.
It costs thousands of dollars.
Right.
They somebody else has to pay for that. Maybe the kid goes to work instead of going to college because they can't pay for it.
Right.
And just all these things that happen along the way. But go ahead.
Can I ask you a question on that? So this is what I think is interesting. I think Ed brought up a good point, especially like African American men, right?
Mhm.
Or men in general. There's like a sense of pride, like, well, I'm gonna be here forever,
Right.
And they don't think about the fact that if I die at 29, if I die at 35, I still want my kids taken care of, right? So what can we do, or what do you see as helpful with getting people to really understand why it's important? And we're not wishing anything bad on you, but we're preparing just in case something happens.
And it's really one of those things where you have to have a real conversation.
Mm-hmm.
And I usually have the mother and the father together when I'm talking, and I talk to the husband, but I'm really talking to the wife.
Mm-hmm.
And I'll ask the wife, if something happens to your husband, how long you think that you would need?
Because the wife lives longer,
to
right?
Yeah.
We all know that.
How long do you think it would take you to get back on track?
Yeah.
Okay.
Yeah.
I mean, I know you're gonna miss him, you're gonna cry,
Yep.
but the caretaker's gonna come.
Yep.
Want their money right away.
Yeah.
And also, the kids still got to go to AAU. They got to have you have to have
Right.
a car. You have to have a place to live.
Right.
But I've also found that if you take care of the house, at least the house,
Uh-huh.
that's the biggest expense in anybody's
So like
household.
have enough money to pay the house.
Pay the
off.
house off, and then people most times a spouse or kids they can get part-time jobs to pay for everything else in the house.
Yeah.
But if they at least have enough money
Yeah.
to pay for this house,
Yeah.
then that's a great head start because now you have a choice. You can either pay for the house
Yep.
or sell the house.
Right.
either way, you still have money there.
Yeah.
If you have nothing,
Right.
now you have a house that's not paid for.
Right.
You don't have anything to pay, at least pay for the bills.
Right.
In the house. So that's why I think it's so important.
Yeah.
And just to have that real conversation, because when you bring it down to it,
Yeah.
some of those, houses, I tell people it costs $50.
Right.
I told some of my friends, I was just with you.
Yeah.
And we went to a store and we bought a bottle that cost $50.
Mm-hmm.
Right.
Mm-hmm.
You know what I mean?
Yeah.
I've been with you. Every week you go buy something that costs $25,
Mm-hmm.
$50.
Mhm.
You go to a basketball game, you'll spend $100,
Mm-hmm.
$200, but you
Mhm.
won't spend. And you'll buy your kids some Jordans that cost $250.
Yep.
Right. It
More
just
and
don't-
more.
Yeah.
Mhm.
So what's most important?
Yeah.
Is your kid gonna remember that those Jordans, or he's gonna say, "My dad took care of us."
Yeah.
When he
Yeah.
passed.
The other thing I think people forget or don't think about is, for loans and credit cards and all this stuff where you're both on there, husband and wife.
Mm-hmm.
One of you dies, the other one's still responsible for the whole thing. And so not only, pay for the house, but, you got the credit card debt, all that now is on the surviving person. And that's how the system works.
That's how it works.
Yeah.
And I think that's where we play a role with helping Ed and the network.
Yeah.
When you would sit down for financial coach, homeownership advisor, we're going through that budget item,
Yeah.
right? And you notice before they actually even probably get pre-approved for mortgage,
Right.
if they're paying renter's insurance,
Yep.
if they're paying life insurance, because
Yep.
that should be expense on that
Yeah.
budget. And I think that's a good time for us to double down on what Ed has been talking about and go over the different
Right.
aha moments. Like, hey,
Right.
if something's to happen to you, who's going to pay this car note?
Yeah.
Who's going to pay the rent? Instead of it being rent, it's going to be a mortgage. Who's going to pay that? And I do think it's really getting people to understand, because I think with Ed, this is one of my issues I have. Oh, I don't really have the $25, $50.
Mm-hmm.
Really, you do. It's what are you willing to sacrifice to make that monthly payment that is going to eventually set your family up for long-term success. Here's another thing, Ed, I don't know if a lot of people realize, and I know you realize this probably as well, is life insurance passes on tax-free,
Mm-hmm.
right? And I don't think people understand, if I set up this $200,000 policy or $300,000 policy and something happens to me, you actually don't pay any tax on that money and you can do what you want with it. But I do think we got to figure out how to get people to invest in their future versus just today. I think so many things we're doing is like, I'll buy it next year.
Right.
Oh, I'll buy it next year, right? And what also throws, Ed, let me ask you this, if people are doing this, not just have their own life insurance policy, but are they taking advantage of the policy that their employer might be offering them as well to then double down on that, right?
Yes, definitely. And most employers do 2 times your salary.
Mm-hmm.
You make 50, they give you 100.
Mm-hmm.
It's actually pennies on the dollars.
Yep.
But it's actually one caveat to this, and I tell people that is, well, I have it at work. Well, when you get sick, what happens? You lose your job.
Yeah.
So you want to have something in place that's yours, and you're actually in total control
before you get sick, or those premiums are going to be not doable,
or you're not going to be able to get it at all.
Right.
Okay, so I tell people you want to take care of both. Have the one at work and your personal one.
Right.
Because most times at work, you can't, even if you switch jobs,
right,
you won't have that insurance.
And not all work has it. There's one more horror story I want to address here, because I heard about this, and then it affected potentially my sister. These parents had co-signed all the student loans for their kid. And I mean, the kid had every intention of paying it. It was like a no-brainer, right? Well, the kid passed away unexpectedly. And the parents are on the hook for these gigantic student loans that they just co-signed for as part of like thinking they were being good parents. And so I heard somebody saying, if you're in that situation, you should get life insurance on your kid. And then my sister was my nephew is in school overseas and doing all this stuff, and they co-signed for him. And I was like, well, I heard this thing where you should get life insurance on them, and here's why. So things you don't think about until you see the situation. Super interesting. Well,
and on that same topic, we don't always know how a kid is going to turn out, right?
Yep.
I tell people, get life insurance on your young kids, because then you're taking care of your grandkids too at the same time, right? So some people have 1, 2, and 3 kids, right? there's always I don't care what anybody says. There's one kid that's gonna be the most
child.
responsible.
Right.
And you're gonna have one that's not as responsible.
Right.
You know what I mean?
Yeah.
You can have
It's
3 intelligent kids. They all can go to Harvard, right?
Yeah.
But one's gonna be the party kid and one's gonna be in the dorm room.
Yeah.
That's the kid that you want to put on the policy, right?
Yeah.
Because I mean, as far as taking care of the business,
Yeah.
you know,
Yeah.
it's one of those things where I tell people too, people who are going to potentially have grandkids, put it on the parent now.
Yeah.
Because then the policy is already in place.
Yeah.
If they want to pay it, it's cheap. I'm sorry, I didn't say cheap. I would say
cheaper,
less
more
less expensive. Exactly. And so you pay for it. Something happens to you, then that payment just goes on to the child.
Yeah.
And so if something happens to that parent, the parent, it's already been set up by you.
Yeah.
So if you take control of, because you can take care of 2 to 3 generations by just taking care of it when they're younger.
Yeah. Very
cool. So that's just something to think about too.
Yeah.
Well, I appreciate that. What a super interesting conversation. Because we're a home ownership podcast, I want to talk about home insurance as well. So, in fact, this is a good story. I was just down in Chicago this past weekend visiting with my brother-in-law, and they had a roof leak that had developed, and when we went up there to see what was up, there's a hole about that big in the roof. This branch had fallen or something and just punched a hole in the roof. And I was like, what? That is... yeah. We ended up doing some jerry-rig fix to it, but I was like, I'm not the person to do a permanent fix on that.
Right.
And so he has to deal with insurance and stuff. And so just a good example of, geez, you never know what's going to happen with insurance. So what I want to ask you, Ed, if somebody... and I know homeowners insurance is required as long as you have a mortgage, because that lender is going to require you to have it. But if somebody comes to you, Ed, and they're seeking homeowners insurance, how do you guide them through that process?
I'm going to say something funny first.
Yeah.
So lenders require you to have insurance, but they don't require you to read the policy.
Okay.
Say that again. Say it again for the audience, please. Please say that again.
Okay. They make you have, but they don't require you to read it. Okay. I always believe that it's responsibility that goes on the owner and the agent. Right. If you think back a couple of years ago when people had we kind of had the subprime loans.
Yeah.
Okay. That went on both sides. Of course, the homeowners were affected, but we have to take some type of responsibility, the onus on the owners. If you hire a lawyer, and then I'm gonna get to what we're talking about, but if you hire a lawyer, don't just have the lawyer just say sign here. Take your time. I tell people, when you go to a closing, remember you're paying everybody in the room. Nobody else in that room is paying anything. Right? So make sure that everybody explains everything to you. And that's why it gets back to the homeowner's policy. Take time to understand the policy. When we're going through the quotes, ask questions. And that's a big deal. If somebody's taking you too fast through the policy, that's not the agent for you. Right. I don't care what company it is.
Right.
That's not and if you didn't have time to do it prior to closing, because I know we're always going through so many things prior to closing, right? After the closing, take time to call the agent back and just go line through line with it. If that agent doesn't want to take time with you, that's not the agent for you.
Right.
Okay?
Right.
You want to understand it, because most people learn what their coverages are when when the insurance company says, we don't cover that. We don't cover that.
They put a claim in.
I don't have some pump coverage. So it's one of those things where they come to an agent, and the agent, asks them a bunch of questions, and an agent should ask you a bunch of questions. I tell people when you go to the doctor's office, what's the first thing they hand you?
Right.
A pad, right?
Yep.
And you have to fill out all these questions.
Mm-hmm.
That's what you should be doing with your homeowner's insurance as well.
Yeah.
The agent should be asking you a bunch of questions,
Yeah.
so that he can give, because everybody doesn't need the same type of insurance.
Right. It's not cookie cutter, and if you're in a cookie cutter situation, you should run.
Yeah, because some people have wood roofs, steel roofs,
Yep.
metal, all type of different roofs, right?
High end finish, low end finish.
All different.
Yep.
You know what I mean? So one of the basic things when you ask for a quote, kind of listen to if they're really going to explain to you once they send it off.
Yeah. Yeah. So homeowners insurance, one of the things, Henry knows this, in the home stretch classes, we make sure that people understand, when that refrigerator goes out, you're not calling your Country Financial rep to get a new refrigerator.
Mm-hmm.
This is stuff you got to plan for your own. But so when you talk about homeowners insurance, there's also the issue of liability, which I think people don't think about. What if somebody comes up to your house and they slip and fall and knock their head and they're in a coma or something, and you can have liability for that. And homeowners insurance is available for that as well if you know what you're doing.
Yes, and I'm gonna tell you, this is a true story. It's a weird story, but you talk about liability.
Yeah.
Client comes up to the house. They had a rusted porch, a rusted railing on their house.
Mm-hmm.
The person coming up, they actually cut themselves on that railing with the rusted paint. $275,000 later, because the rust got into the skin,
like tetanus or something.
Yes.
Wow.
And those are things that you are liable. You are liable to keep your property up to code.
Mm-hmm.
Right? Someone comes in your house and a plumber comes in. I tell them, a plumber comes in and they trip and they fall.
Mm-hmm.
Was it your fault or was it their fault?
Yeah.
Okay. And if you're not liable for it, it will not be paid for. Under your liability. On your liability insurance.
Yeah.
And people don't sue for $100,000 anymore.
Right.
You're starting at 100 and up.
Yeah.
So don't get the minimum.
Yeah.
Liability insurance is pennies on the dollar.
Well, and that's the thing. So I've done this before. You go into your policy and you change the numbers around. You say, what if I increased from 100 to 300? What does that do to my policy? Well, it only rises it by like $3 and stuff like that.
For the year.
For the year. I mean, so really good point. Yeah. And you want to make sure that, you're understanding what you're doing. All right, that is super helpful as well. Last thing I want to talk about, Henry, again, one of these things I've heard you talk about all the time: trusts, wills, heirs, property situations, all that kind of stuff. This is super important as well.
Yeah, and I go back to what Ed was saying. I do think you want to interview the people you're working with, right? So I do think one thing that has unfortunately happened in the industry, everything's kind of a rush.
Yeah.
Right. Well, I need you to help me get your homeowners
or
insurance.
Online. Right.
And I just need you to just get a policy, right?
Yeah.
And send it in to me. And I think what Ed was saying, I think a lot of people, when they get their policy, they don't read it as well. But I think with the wills and the trust, what do you want to do with your money? So if you have the proper life insurance, you have life insurance through Ed, Country Financial, you also have life insurance through work. What do you want to do with that $300,000, $400,000 that your children or your spouse could inherit if something was to happen to you? I don't think people have even thought about that. Or some people's like, well, again, I don't want you to do this with my money. I don't want you to do that with my money. Well, you can set that up to a will and a trust. I think everybody has to figure out what's better for them. But I think Ed said something really important we've been trying to say today. You have to have an interview. You have to, when you go to the doctor, they're going to ask you all these questions about your health. And then there's a track record. If you were to go to another doctor, it's like, oh, we need to get your file from over here. I think it's the same thing when we're talking about homeowners or people getting ready for homeownership. What's your 5-year plan, 10-year plan, 15-year plan, 20-year plan? Because it can change.
Yeah.
And I also believe, even in the banking world, I was a former banker. I was amazed at the number of people that came in and said, yeah, my mom or dad passed away, and I need to get into their checking account. Well, you're not a joint owner of the account, and the money's not also being left to you. It's being left to somebody else. Now, we legally can't disclose that. So I think you want to have all your ducks in a row of what do you want to do. I only have one child. right? My daughter, she's 18 years old. She's in college.
Mm-hmm.
She pretty much knows all my stuff goes to you.
Yep.
And if you screw it up, I'm gonna come get you from the grave, right?
Yep.
But these are conversations we've been having.
Yeah.
And I think it's important because I'm trying to tell her, and I think we should be teaching all young adults what we want to be, what are our wishes.
Yeah.
She would know I want her to finish college. She would know I want her to buy a house.
Mm-hmm.
But if I don't trust her,
Right.
then I can put things in place such as a will and a trust that says these are the things of what you have to do to get the money. You have to finish college,
Okay.
then you can get this much money.
Mm-hmm.
And when you get a job and you go to buy your first house, you can call the attorney, and the attorney says, "Oh, yep, you're in the process. You're under contract. I'm going to give you X amount of money towards your down payment that your father might have wanted you to have."
Mm.
So I think these are very important. But I also go back to what Ed was saying. I think it's a conversation that has to be had with everybody.
Everybody.
Right? It has to be you and your children, you and your partner.
Mm-hmm.
I'm blessed. My parents are 88 and 85 years old,
Mm-hmm.
and we're having these conversations about just things they would like to see happen with their money, with
Yeah.
their inheritance for us.
Yeah.
But I think, again, going back to the Black community or the community in general, we don't want to talk about these things.
Right.
Like, why do I want to talk about something depressing?
Yeah.
Well, it's not about being depressing. It's about reality that could actually happen that we can't control.
Right.
And we want to make sure that everything we want to have happen happens in the way we want it to happen. I give kudos. I know more people in the community are starting to do events around wills and trusts. They're starting to have classes about it. You mentioned something about the homeowners insurance. One thing that always cracks me about homeowners insurance, people will say, well, my deductible is only $1,000. I'm like, well, when have you ever really had something in your house that costs just $1,000, right? But for some people, it might
Hole in
be
the roof is going to cost more than that.
Correct. They might need a $1,000 deductible, or you might want a $1,500 deductible or $2,000 deductible. So what can you afford to have? And I think it's the same thing with setting people up for long-term success. And how do you want your money to pass on? And I'll be honest, I feel like the rich keep getting richer because they know all the rules of the game.
Right.
So how do I teach you the rules of the game?
Right.
Via life insurance, having the proper homeowners insurance, having a will or a trust set up, or even beneficiaries. I'm gonna go back. Just having the proper beneficiaries on your bank accounts make the world of difference. Had a very good friend of mine. He passed away in 2019. Unfortunately, his dad passed away in 2021. He was still the beneficiary on his father's accounts, right? Which caused a bit of an issue. So they had to go to probate, right? So I do think there are things that we need to be doing. And if we probably even asked ourselves, among ourselves and our friends, when was the last time all of them looked at their bank statements or looked at certain accounts and said, "Hey, all this stuff is in the way I want it, in the order I want it to be in."
Right.
I tell people all the time, we should shop, right? We should hold our insurance agents accountable. We should hold our investment reps accountable. If you want my business, then I want to make sure I'm getting the best deal possible, because I can guarantee you now, 99.9% of most homeowners do not read their policy after they leave closing.
Yeah.
They just don't.
Yeah.
And one of the big things about beneficiaries that I want to talk about, that's a big deal.
Mm-hmm.
We have a job, we leave a job, we start another job. In all those places, something has changed in our lives.
Mm-hmm.
And one thing that does change
Mm-hmm.
is you get divorced. You have another child and a second family. And I've seen it where a person passes and their ex-wife gets everything because they never changed it to the new wife.
Yep.
Correct.
Yep.
Or they have another family. Just things just happen in life, right? You have kids and you don't say anything about, but that other kid is a part of this.
Right.
Right. So we just have, and so it makes the family, you are gonna cause your family, you are gonna cause a rift in your family.
You're the cause.
From the grave. 'Cause I promise you, I've been at the house and they know who I am when I walk in.
Yeah.
Right.
Yep.
Of course, I'm dapper with a suit on.
Of course.
But when I walk in the house, they know who I am.
Yeah.
Right? And everybody knows that either I have a check in my hand or I'm having them sign something.
Mm-hmm.
Right?
Mm-hmm.
And so most of the people in that room who are actually supposed to know what's going on should know.
Yeah.
What's funny you say that, because I feel like I'm in a situation where families can be blended, right?
Yes.
And I do think those are conversations you have to have.
Yes.
Like, what are our long-term goals in 5 years? You have a child, 2 children. I have a child. Now you really have a family of 5, right?
Yes.
2 adults and 3 children. And I don't know if people think about that, right? And because I do agree with what you said, there were a lot of times that people would say, "But I'm a sibling," or "This was my dad."
Mm-hmm.
It's like, but the beneficiary was never updated.
Right.
Right. And I tell this to people all the time. I have two sisters, right? They're both older than me, 3 years older than me. I feel like my dad has been intentional about certain stuff. My sister has power of attorney for my parents, but I also trust my siblings, right? But I know there are some situations where there could be 3 or 4 children, and one child is in charge, or one child is the beneficiary. They don't have any legal obligation to give the money to the other siblings unless it maybe is in that will or in a trust. Right? That's where that money is supposed to go. So it's very interesting, Ed, that you say that, because sometimes we get going day to day, right? We don't stop and say, man, like, I did leave this job, I went to another job, or I moved a lot more money from bank A to bank B. How's the bank B set up? Right? And if they don't take a look, Bank B might have somebody else on that account that they really didn't want to get all that money.
Person just called me. It was 2 years ago. The mother died, right? And there were 3 sisters. So the smart sister, I'm gonna call her Sister A, is the very responsible one. So they took the policy to the caretaker. There were 3 signers on it, right? Sister A signed her name to the funeral home, but she can only, people don't understand this, you can only sign away your portion. So the funeral was $15,000. The policy was like 60 or 80,000, right? When she signed it, she didn't realize without the sister, she was only giving her 15,000 to the caretaker, and so the other sisters got their whole 20.
Oh wow!
And they did not donate to the funeral. And they said, "Can you do that?" I said, "Yes." You can't sign off for your other siblings.
Right.
They would have had to come in and sign. All 3 of you would have had to sign off, and you could have taken 5, 5, and 5. Right. But you went there by yourself. So you're the only one that signed. So she paid for the whole funeral, and her sister got all their money total. And she was trying to recoup it. And I said, there's no way to really recoup that. You signed the document. You signed the document. So the rift came from the mother. The mother caused the rift between the sisters. So not the sisters. It was the parents that caused the rift with the sisters.
So interesting. Last thing I want to talk about is heirs property. How do you get into that situation? How do you avoid it? I'm assuming it's something you want to avoid. I'm not sure I understand it completely.
Well, I think, again, if you have heirs, you want to if you want to leave things to...
so this is like leaving your house.
Right. So what I tell a lot of people is what we did for my family, we have what we call a TOD, transfer and death deed. Right. That's one way we're doing that. I think there's various ways to do it. And I'll be honest. Again, I mentioned my father's 88, my mother's 85. Sometimes when you bring things to your parents, they still look at you as a child. Right. Like, yeah. But what we end up eventually doing was just having an attorney come by the house. Right. And he explained their different options. And then my dad decided to go with the TOD. Right. But it was also funny. So when he got the bill, he was like, this must not be right. He's like, this ain't enough money. Right. So then he questioned. I was like, no, Dad, that's what he wanted to charge you, because I think he thought we were doing the right thing as a family. But I do think it depends on what you want to do. One thing I see a lot happen in the Black community is people don't understand that when you pass, if you don't have something set up, it becomes part of your estate. Right. So you want to set different things up that can avoid things going into your estate. I also would say what Ed was saying earlier, if you have the proper life insurance, right, you might get that money and you go pay the mortgage off. I do think what I've seen too many times in African-American community is mom or dad die, and the bank doesn't know mom or dad have died, and you continue to make the mortgage payment, then something goes wrong and they realize,
super important.
Right. You now need to pay us off. You need to sell the house or pay the mortgage off. And one way you could do that is by having the proper life insurance. But I think people need to sit down and figure out what do they want to do with that property. It's what we were just talking about earlier. If you have a blended family, do you leave it to all 3 children? Do you leave it to your child? How do you work on that? Or do you leave it to your partner? Because I do think for the number of years I've been in real estate, you see a lot of times it goes to the partner and the kids are like, I thought that was my inheritance, right? So there was no real conversation about it. And I think that's something you have to have. And what I said this before. I think we need to get back to what I was in Milwaukee a few years ago, and we were talking about dining room table conversations. Right. I think we need to come back to some Sunday dinners and have some real conversations of what the plans are for the property. May it be your home, your car, jewelry, whatever. Because when that person is deceased, they can't really tell you what they want, where they want things to go. But if they write it down before they're deceased, then we can honor the wishes of the dead.
Right. But the funny thing about that too, here's a conversation. Well, this is the will. Well, that's not what mom wanted.
Right.
Yeah.
Okay. Because mom is still the mom, or dad is still the dad. So mom needs to tell the kids, well, this is what I'm doing.
While they're alive.
Because what happens is you may have a sibling that hasn't been around in 15 years, and then you have one sibling that takes care of mom and dad while they're older. So mom and dad feel some kind of way about it, right?
Yeah.
You never come to visit. No, I wanted this person to have this. They've, in their mind, they've earned it.
Yes.
Right? And so things get changed. Wheels get changed all the time. And the parent never, and this is in any household.
Correct.
For sure.
The wheel gets changed. The parents don't tell it, and they think that they feel like that child that was there made the parent change it.
Yes.
Right? Because they were sick. They had some type of influence on how they changed that document. But if me as the dad calls a family meeting, you can call a family meeting anywhere now. Team, conference call, Zoom. Right? I want to look you in the eye and tell you what's going on.
So I think that's an excellent point.
They say, "Sorry, Dad, you froze there." I didn't hear that.
Right. Yeah. So that's just so many things happen. It actually happened in my own family. My grandmother, who died at 99 a couple years ago, she had a house paid off. My father had 7 siblings. 2 of the siblings died. So what does that mean? That means that, and my father's name was on the house. So it was my grandmother and my father. So my father owned 50%, right? But he owned 50% of his, and he owned 10% of my grandmother, because your heirs get whatever percentage is left. And based on how it was purchased on title, those heirs might get, what if those siblings had kids? You die, sometimes your heirship goes to your kids, right? So you got to have those conversations to understand, and I tell people it's best to hire a lawyer. I mean, most lawyers are not going to charge that much for that service.
Right.
It's going to be other services around that, but the actual will is not going to cost you that much.
Right.
And I believe that too, because I do think they know what could happen if you don't have the will. So it can be way more expensive for families versus, let me charge you this fee now to avoid the more expensive things down the line.
Right.
Because probate is no joke.
Right. All right. This has been an excellent conversation. Thank you guys so much. Thanks for coming on the show, Ed, Henry.
Thanks for having me.
Thank you for having us.
Appreciate it. So I'll give my traditional exit speech here. If you are interested in exploring homeownership for your own household, you can take a home buying class and enlist the help of a homeownership advisor for free by going to our website, hocmn.org. Our advisors and educators are embedded in organizations across the state, and they will work with you to help you get mortgage ready, educate you on the buying process from A to Z, and walk with you through every step of the process. In closing, as always, I want to acknowledge our sponsors: Associated Bank, Bell Bank, Bremer Bank, Huntington Bank, Midwest One Bank, and Old National Bank. Our sincere thanks to each of these organizations for their support. Thanks, and see you next time.